Welcome to another enlightening episode of Count Me In, where we delve into the pressing issues shaping our world and the business landscape. Today, we have the privilege of hearing a wonderful conversation between our guest host, Kelly Richmond Pope, accounting professor and author, and Lamont Black, an associate professor of finance at Napoli University. They discuss an issue that is at the forefront of finance innovation, cryptocurrencies and blockchain technology. Lamont brings his vast knowledge and expert insights to help demystify these complex topics and explain their relevance to the finance industry. So whether you're a CFO, a controller, a finance professional, or simply a curious listener, prepare for a deep dive exploration into the world of blockchain and cryptocurrencies. Let's get started.
So Lamont, thank you so much for joining me today. And if you could start by just introducing who you are.
So I'm an associate professor of finance in the Driehaus College of Business at DePaul University. So I'm one of your colleagues.
You are one of my colleagues. And so I want to welcome you to the IMA podcast series. And I have been working with the IMA for a little over a year, working in research and thought leadership about ethics, corporate governance, risk, and my favorite love, fraud. And as we watch the news, read the news, what has just been in the news so much in the past, I'd say 18 months, is this really weird word called cryptocurrency. And when I came to you originally about trying to understand what in the world is cryptocurrency, what you shared with me was how important it was to understand blockchain. And what I want to do today is have you really break down the importance of understanding blockchain, because what I think the world is getting a little scared about is when you keep hearing about cryptocurrency, these exchanges that are falling apart. And I think everybody is really skeptical of this concept of cryptocurrency. But what I know you feel as though people might be scared of that, but you still need to understand the soundness and the value of the underlying technology, which is called blockchain. So could you tell us a little bit about what blockchain is and why we need to know about it as managerial accountants?
Yeah, so blockchain is the platform behind cryptocurrency, and blockchain is a technology that I think everyone should be trying to understand. It's really a system of shared record keeping. So if you think about how we now live in the information age, most of what we do is involving data. That data is being stored and shared using different systems today, whether that's on the cloud or other types of servers. And the blockchain is a way of sharing information so that it's recorded on a shared ledger. So you can really think of blockchain as a system of accounting. And what makes it different is that rather than these ledgers being held in a private form, different ledgers on different institutions that then have to communicate, blockchain kind of cuts across all those silos. It's a way of recording information across an entire network, sharing that information with the network. That makes it very secure, very transparent, and very efficient for sharing information. So as we move deeper and deeper into the digital economy and e-commerce, I think every organization should be trying to understand, how do we store and share information on the internet? I think blockchain is likely that next platform. And so even in the world of accounting, I think this is where things are likely headed.
So that's a great explanation. And it really makes me feel a lot more comfortable in understanding that although I hear all this craziness about cryptocurrency and cryptocurrency is just where you shouldn't put your money, you've made me feel a lot more comfortable about why I need to understand blockchain. But let me digress for a second. What in the world is going on with all that we hear about FTX and the collapse of these exchanges? What is that conversation even about? And how does that affect, or how should it affect, our opinion of blockchain?
Yeah, so cryptocurrency is the money that is transferred across public blockchains like Bitcoin and Ethereum. And so people can own Bitcoin and Ethereum as digital assets. And crypto prices ran up dramatically during COVID. There's different arguments for why that occurred, but one of them would be the amount of monetary stimulus as people had all these different sources of income coming in, let's say through stimulus checks in the form of fiscal stimulus, that money flowing into the economy, a lot of that ended up in crypto. And so Bitcoin almost reached $70,000 for one Bitcoin by late 2021. And as we moved into this year and our economy started to slow, inflation started to rise, largely as an outcome of COVID, crypto prices started to collapse. Now, some people focus on the collapse of the crypto market as being something unique, but I just would point out that the stock market also entered bear market territory in the first half of this year, and in particular, tech stocks. So tech stocks are very risky, and so speculative assets during an economic slowdown, those prices tend to fall the most. I view crypto as a form of technology. It's the frontier of technology. So to me, it's no surprise that as risky assets have sold off this year, crypto has gotten hit the hardest. Now, as it relates to the exchanges, that's really been the problem this year because most people, when they buy crypto, they buy it on an exchange like Coinbase here in the US or FTX, which was an offshore exchange headquartered in the Bahamas. Now, many people wanted to jump on the crypto bandwagon, especially as prices were rising. And so, a lot of people were investing their money in exchanges like FTX. But one thing that people didn't fully appreciate in this period of time is when you own crypto on an exchange, you don't actually own the crypto itself. It's really being held on your behalf. And so FTX is what's called a centralized exchange. When a centralized exchange fails or goes bankrupt, you're going to lose your money. They're going to freeze those redemptions. You're not going to be able to get it back. And so now I think a lot of the fear around cryptocurrency is not just in the price volatility. It's also the fact that you could lose everything. And so I think crypto does have a PR problem now of people just being now hesitant and confused about where all this is headed.
What I think what's interesting about our conversation is as managerial accountants, as CFOs, as controllers, as finance professionals, we could be interacting with clients and or in an organization that either embraces blockchain or accepts cryptocurrency and the way that they handle transactions. And so I think it's really important for us to understand some of these nuances. And my question to you is this: how do I know what kind of exchange I should engage with if I do want to purchase cryptocurrency? Because I do have to use an exchange, correct? That's the only way.
Yeah, it's the only way to enter the crypto ecosystem. So if you think of cryptocurrency as a currency, a form of money, then it's sort of like a foreign currency. Like if you want to buy euros with dollars, or if you want to bring the euros back into dollars, there's an exchange rate. And so the price of crypto is really an exchange rate between dollars and crypto. And the US money, the dollar, is a fiat currency. And there's a long history behind that term, but it basically means that we are no longer on the gold standard. So the US dollar is not backed by anything physical. It is a fiat currency. But in order to buy crypto, you have to go through something called a fiat on-ramp because you're basically buying crypto with US dollars. You can't do that just anywhere. You kind of have to go through one of these exchanges, which is why that's the starting point for most people. But one key point that I would like to highlight is you don't have to keep your funds on that exchange. And so the exchange that I typically use to buy crypto is Coinbase, because Coinbase is a US headquartered institution. It's publicly traded on the US stock market, highly regulated by the SEC. And so I think it's, relative to FTX, a little bit safer, but not totally safe. There could be a run on Coinbase as well. But once you own crypto on Coinbase, you then have several options. You could move that money into something called a digital wallet. And what makes a digital wallet different from an exchange is that you then own the crypto. You manage what's called the private key There's no risk of bankruptcy for some type of exchange because it's like money in your wallet, just like US dollars in a physical wallet. This is crypto in a digital wallet. You own it, you manage it. And so it protects you from some of those types of risks.
For the first time in my life, I understand everything you're saying.
That's great.
But no, how you described when the exchange is making transactions on your behalf versus the digital wallet, I understand it because I actually own some crypto. Yes, I'm the accountant that owns some crypto. And let me tell you a little bit about the way Lamont and I met first, because yes, we are colleagues at DePaul University in Chicago, but we also were in a movie together. And we were in a movie about a fast appreciating asset at that time called Hex. And so there was this production company that was doing a documentary about this gentleman by the name of Richard Hart. And Lamont and I actually flew out to the south of Spain to interview, can you believe he did this, Lamont? Interview Richard Hart at this undisclosed mansion on the cliff of a mountain, on the side of a mountain. And I was completely skeptical of everything crypto. I didn't have the understanding that, of course, you had, Lamont, but it was fascinating to watch you go back and forth with you had like on you were a finance superhero going back and forth with this gentleman about this cryptocurrency that he created. So my question to you is this: when we did this project together and all that you know about blockchain, all that you know about crypto, and then there's this new created currency that this gentleman started, what was your opinion of that experience? What was your opinion of Hex at the time?
Well, that was a pretty crazy experience, and but it was great working with you on that. And so I think what's hard for a lot of people with cryptocurrency is that there are so many of them. So I think everyone's now heard of Bitcoin. Most people have now heard of Ethereum or Ether. Those are the two largest cryptocurrencies. But if you go to a site like coinmarketcap.com, you can see that there are now, over 10,000 cryptocurrencies. And so people wonder, well, where should I invest? What's right? What's wrong? What's legit? What's a scam? And I would acknowledge that there are a lot of cryptocurrencies that are a scam. That's why I don't encourage people to just follow hot tips. You should never be looking for, some crypto that no one's ever heard of, but you think is going to pump for, 100x over 5 days or whatever. You should just focus on the core ones like Bitcoin and Ethereum. But this documentary we worked on was for a particular cryptocurrency called Hex, which is really an application, a project built on Ethereum. And so what's also important to understand with cryptocurrency is you have your kind of native tokens that trade on the blockchain itself, like Bitcoin or Ether on Ethereum. But Hex is a project built on Ethereum that can create its own token on top of the Ether token. And that project the documentary was really about, is this project legitimate or not? And we were brought in as the skeptics to try and kind of ask some hard questions. And I think we ended up in a place where we were not fully convinced that this was the future of cryptocurrency. I'm a big fan of this space. I do think cryptocurrency has a lot of potential still, but for some of these individual projects, I think there's still a lot of question marks.
Now, when you go in and you do your consulting with organizations, what do you find to be the questions that the employee population may have or the executives may have?
Yeah, so, I'm in the finance department in the financial services area. And so a lot of the firms that I work with are financial institutions, banks, credit unions, trying to understand what does this mean for the future of money and banking, which is actually how I got into this space. So as a quick background, so I'm a former economist from the Federal Reserve. I was there through the financial crisis. And so, my background is very much in risk and regulation. But when I left the Fed to join DePaul and started teaching money and banking back in 2013, it was my students who started asking me about Bitcoin. And that started a whole journey for me about, is Bitcoin money? And I'm now convinced that I think it is an important chapter in the evolution of money. Whether Bitcoin itself will become, a common means of payment, I think is still yet to be seen. But money is digitizing and assets are digitizing. I think everyone would agree with that. And so the financial institutions that I work with are often inviting me in to speak to their board of directors, to speak to the leadership team, to talk about strategy and really strategic risk. Could this emerging ecosystem of crypto and blockchain potentially disrupt traditional financial services? If people start using blockchain as a peer-to-peer payment system, that could disintermediate banks and credits from the payment network and the payment system, to the extent that people are now able to get loans on a blockchain. So decentralized finance, or DeFi, is an entire financial system that's being built on the blockchain network. And so banks and credit unions are looking at this, trying to figure out, do they have a role to play in the future of this technology? Because the original vision for crypto was replacing banks, even money without government. But I think with the importance of regulation, with the importance of ethics and society, I think what we're likely going to see is a integration between traditional finance and decentralized finance. And I think banks and credit unions are going to have a very important role to play at that intersection.
Interesting. Well, Lamont, this has been great. What I'm also excited about is we are working on a paper together in conjunction with, of course, the IMA about the management and the risk of blockchain and what managerial accountants and finance professionals need to know about this space. So I hope that everyone that listens to our conversation today also reads the paper that we write, because I think it's eye-opening. I know that I've learned so much from working with you and listening to you. I did purchase a little snippet of Hex when we were doing that project. Of course, it is almost worthless at this point. So I don't know that I am a big cryptocurrency cheerleader yet, but I do have a respect for blockchain and understand that it is something that we need to know. Like you said, I don't know where we'll be 5-10 years from now, but I do want to make sure that I am current. And this sounds like it could be a big change. Something that you said in one of the answers to the questions, is you talked about the idea that blockchain is this decentralized peer-to-peer type process. And I want to focus on the word decentralized, because one thing that you said when you talked about it being decentralized is you then said that you used Coinbase, which Coinbase was highly regulated, had oversight by the SEC. And so I think what I took from your comments is the point of this integration piece is probably what makes most people feel more confident and more secure, because there's pros and cons about something that's decentralized. The pro is you don't have this third party intermediary, but the con is you don't have the regulatory body that may give a sense of security and integrity to the data that a lot of us, especially accountants, are used to feeling. So I like how you talked about this idea of the integration of the two as opposed to the replacement of one. And I really, that resonated with me, because for people like me who are ultra conservative, especially when it comes to money, I think the integration and appreciating the integration of how this technology can impact business transactions in the future is really important to understand. So I'm rambling a little bit, but I finally understand what you're talking about. I'm not a cheerleader like you yet, but maybe one day. So any lasting thoughts that you want to say before we end our talk today?
Well, first of all, I'm very excited to work on this paper with you, Kelly, because I think I'm coming at it from the perspective of finance. You're coming at it from the perspective of accounting. So I think in terms of managerial accounting, I think we're going to bring those two perspectives, help people understand the implications of this technology. And I think help remove some of the fear and hesitation around this, because like you said, crypto has very much gotten some bad press recently because of FTX. But I want to help people understand, blockchain and crypto are related. We don't necessarily have to pull these two entirely apart. And so in this article, we're going to talk about public blockchains like Ethereum. How can you use that for business use cases and things like that? So I think this will be a unique take on blockchain relative to some of the other things that are out there in the accounting space. So I think we're going to have a lot of value to bring to the profession.
Well, thank you so much for the time, Lamont. This is great. And listen, we have a movie premiere coming up one of these days soon. So we need to walk the red carpet, bring our families, red carpet, talking about this crypto movie we did together. So I can't wait for that day.
I'm looking forward to it too.
Thanks so much for the time today. I really appreciate it.
Thank you, Kelly.
This has been Count Me In, IMA's podcast, providing you with the latest perspectives of thought leaders from the accounting and finance profession. If you like what you heard and you'd like to be counted in for more relevant accounting and finance education, visit IMA's website at www.imanet.org.